Welcome to the Aussie Firebug Podcast, the financial independence podcast for Australians. Hi guys, welcome to another episode of the Aussie Firebug Podcast, the financial independence podcast for Australians, where I interview clever people who have already reached or are on their way to financial independence. Our guest today is Andrew Ward, the founder and managing director of online investing tool Self-Wealth. Andrew is a former executive manager at Commonwealth Bank who has held many other high positions throughout his 20 years in the finance sector. Andrew's seen an opportunity in the market for an online community for investors, but after failing to get through the red tape that comes with working in large organizations, decided to start up his own company. Andrew, welcome to the podcast.
Hi, Matt. Thank you.
Can you tell us a little about the online tool Self-Wealth?
Sure. Well, really, Self-Wealth was born out of frustration, as you mentioned in your opening. I've been in the industry for a long time, working at larger institutions across platforms, administration platforms, funds management, financial planning, stockbroking, etc. And I thought I didn't necessarily want to pay, the typical value chain and all those percentage-based fees across the industry. So I thought if anyone could give self-directed investing a crack, I potentially could. But really, the only option I had was to jump over the chasm or over the dark side to online broking, to the CommSecs and E-Trades of the world. But in doing so, very quickly realised that there were some services from the traditional part of the industry that I did value, portfolio construction, advice, reporting, etc. So Self-Wealth was really born out of trying to bring diluted levels of those services into online broking world, where you directly own your own stock, you weren't held up in custody or unit trust, etc. The first hurdle I really had back then, I wanted to remove the percentage side financial services as well. So I wanted to have a subscription-based service, because I think why pay 10 times as much for 100,000 versus 10,000 if you get the same level of service? I think it's just nonsensical. So I wanted to remove that. So the first hurdle I really hit was trying to construct portfolios. Although I've been in the industry for a while, I've never actually been personally a fund manager or a stockbroker. So I tried to go to the various professionals to give me portfolios to construct for, this growing membership base. They all either wanted to charge a percentage-based fee or asset management fee, or didn't want their IP to be shown. So that's when it dawned on me, and this whole peer-to-peer construction or social network for investors was born. I realised I had to really use the intelligence of sort of my own investing community at Self-Wealth to create those portfolios for others to follow and help them construct their own portfolios moving forward. So Self-Wealth was really born out of that. And since the journey began 5 years ago, we've really developed those diagnostic tools to help people better construct portfolios based on the rest of the community. And the main challenge we had at the start was there is no greater herd mentality than in investing. So we really had to stop that lemmings going over a cliff thought process. It's like, you hear a stock in a taxi or at a barbecue, that stocks are already run its course. So we really had to create some key diagnostic tools to really enable our members, who may not be that savvy when it comes to investing. They're self-directed and they just want the help to know, who are the best investors and the best ways to construct portfolios. So we did that. We've created two diagnostic tools, one called the safety rating, which is a 5-star score, which really just measures the diversification of your portfolio, making sure you don't put all your eggs in one basket. So, and this really encourages a lot of ETF investing in the community, because that's the only way really to get international shares, property, fixed interest, etc. And that feeds into our gold standard diagnostic tool, which is what we call the Wealth Check score, which of the 30,000 odd portfolios in the solution as we speak, where do you sit on a time-weighted performance basis? So where in that 30,000 on a peer-to-peer basis, how well are you investing? So that's a key component of that. The safety rating, which we just mentioned, that diversification tool, is part of that as well. And that really gives you an indication of the best investors over a long period of time who are well diversified. And really, we do prove that past performance is not indicative of future performance. That old chestnut as a disclaimer. We truly do prove that. But however, using these key diagnostic tools, you can see who have been the best investors over a period of time, and give you the best chance to realise that they'll probably be the best investors into the future. So that was sort of the genesis, I suppose, Matt, of Self-Wealth. But what really evolved, and to take you to Self-Wealth today, you construct portfolios within the solution, and we tell you how well you are going compared to this target portfolio that you may create from the community. And until last year, you can click on Rebalance and we tell you what to buy and sell to get that perfect or that target portfolio. But people then have to go up to CommSec or E-Trade to their broker. And it was sort of an overwhelming demand for our members coming to us saying, we really like the solution. It's user-friendly, it's easy to use. However, we don't want to toggle off to our broker. Can we execute and do trading within Self-Wealth? So that had me starting on another journey of trying to find a flat fee consistent with my ethos of this no percentage-based sign brokerage service. And it took me 2 years. I was told it couldn't be done because the ASX have a percentage-based, 2 percentage-based fees, a clearing fee and a settlement fee. But finally, I was able to convince the clearinghouse Pershing, which is owned by the Bank of New York Mellon, to provide a flat fee for us. And that was sort of revolutionary for the industry. And still, Self-Wealth now is the only flat fee brokerage in Australia. And we launched that at the end of last year. And that's really changed the business. It's commercialized the business. And it's almost like bringing the horse to water. People understand $9.50 flat fee trades. Doesn't matter whether it's a $5 million trade or a $5,000 trade. And when they come into the solution based on that, then they discover this whole social networking in the whole community, which really creates the stickiness for our solution. So long-winded way of getting there, Matt, but Self-Wealth is really two things. It's the online flat fee brokerage with this really rich community, peer-to-peer investing solution behind it.
Wow, so much to unpack in that opening. No, that was fantastic. And it's funny that you mentioned that because, I was doing my research before this podcast and I wasn't completely aware of the social aspect of Self-Wealth. I had come across Self-Wealth in the last couple of years, and we spoke before we started this podcast. Every couple of weeks I would get an email or a comment saying, have you checked out Self-Wealth? There's flat fees. Is it $9.50, did you say, per trade?
$9.50, that's right. Yeah.
Just phenomenal, $9.50. I'm currently paying $19.95 for under $10,000 with CommSec at the moment. And so that's half price to what I'm paying. And then, like you said, as you trade with greater volume, it's the percentage base model with CommSec and all the others, and you pay more and more. But with you guys, it's just a flat fee, $9.50, and that's sort of how I come across Self-Wealth in the forums and stuff. But doing the research and stuff, there's the whole other side of Self-Wealth once you're actually in is the community and having that benchmark to measure yourself against.
That's right. It's also it creates, as I mentioned earlier, the stickiness. We've got practically zero churn, and that's based on the fact that once people are in the community and they, as you say, benchmark themselves, see how they're going, and tools to help improve their performance, for their retirement, they don't tend to go anywhere. And you mentioned sort of the $19.95 trade. So there's a big incentive to move to a $9.50 flat fee trading solution. And once you're sort of with us and you have the help and you're sort of being patted on the back and arm around you to help you better invest, people don't tend to leave. So it's really that community. Not only is it fantastic for all the investors, but it really creates stickiness and customer loyalty too.
Yep. Absolutely. Now, I want to read you a quote I got from an article I was Googling about you online, and I just want to hear your reaction. You were once quoted saying, at the bank, you need 5,000 meetings to get anything done, 6 months before an idea is even looked at, and you need another 5,000 meetings to decide if it will work, and then it takes 3 years and $50 million to make it happen. Now, I have to ask you, was Self-Wealth the idea floated at a previous employer, and did it not get up for whatever reason?
No, Self-Wealth was never floated, but as my role at the CBA, that we're playing. I was responsible a lot for the sort of the innovation in sort of the wealth team, because private banks, especially at the Big Four, are really looking at the wealth solution, not just the red carpet, the loans, etc. And I was trying to get, rather than having traditional platforms, and they're trying to get managed account technology, SMAs, IMAs up and running. I was part of a working group on which platform we could potentially use. And, I was probably doing that for 2 years, and still when I left, it hadn't been implemented. And everyone wanted to get their fingerprints all over it. And also being based in Melbourne, working for a Sydney bank, that was also problematic. So it's pretty accurate in regard to many, many meetings. Lots of people want to justify what they're doing and to, have their input. Too many cooks in the kitchen type of thing.
Sorry, continue.
Yeah, and so that really, when you have an idea and you try to work towards a resolution and it takes, longer than a year, it's naturally going to meander and not be like Chinese whispers. It's nothing like what it should be. And the benefit of a startup, and this is really what I've been able to experience since setting up Self-Wealth, is you can just move so quickly. And, it's you, a whiteboard, and a couple of your team making a decision within 5 minutes. And that is such an advantage over the big banks. And, we can talk later about how I think banks will enter fintech and how, their competitive responses and what they'll do. But there's such an advantage. It's, the winner in this fintech race, it's the fintechs getting their distribution or the big banks working out how to innovate. Whoever gets there first will win.
Yeah, right. That's definitely something that would be interesting to talk about. So you've mentioned the flat fee for the brokerage cost. Is there another fee associated with the online community or anything like that?
Yes, there is. So there are two components to it. As I mentioned, with sort of the two offerings. So there's $9.50 flat fee brokerage, no commission, doesn't matter the size of the trade. Then once you join, it's free to join. You get all the tools, all the bells and whistles, the whole community, construction tools, etc., for free for 3 months. And at the end of the 3 months, it's then, if you still wish to use the community and all the tools and benchmarking that goes along with it, it's $20 per month.
$20 per month.
You can decide not to pay that and just have the brokerage solution, but then you won't have access to the 30,000 odd members, which is growing rapidly, and all the tools associated with helping you better invest.
Okay, so you get the first 3 months for free, just to get a taste, and if you like it, you can continue paying the $20 a month, but you don't have to. You can stick with Self-Wealth if you just purely want to do your trades.
Exactly right.
Yeah. Okay, cool. And what happens if I'm with CommSec? So let's say I wanted to go over with you guys. Can you just explain to the listeners what a CHESS sponsored holding is and a HIN?
Yes, that's one of the key things we wanted to do from the start. And by way of background, having a CHESS sponsored and having a HIN means you actually legally and beneficially own the stock, as opposed to having it under custody, as some cheaper brokers in Australia do. One of the problems with the GFC and a couple of the brokers like Opus Prime and others that went down is that sometimes if there is a custodian, you should be very careful to ask in broker that you have whether it is CHESS sponsored, so which means it's legally owned by you, not just beneficially. Because if there's a custodian, they actually legally own the stock and have the ability to on-sell or lend that stock to others to short the market. So CHESS sponsored, HIN sponsored, I was paranoid that I had to have that solution, because then by way of safety, I mean, if Self-Wealth for whatever reason cease to exist, or our clearinghouse cease to exist, you can just remove Self-Wealth from the equation, and then take your HIN or your CHESS sponsored stock to another broker, because you actually legally and beneficially own it. So it's a big question to always ask when you are starting out to a new brokerage. Is this CHESS sponsored? Do I legally own it, or is there a custodian under the hood?
Yep, and this is a huge point I just want to emphasize here, because as you said, if it's not CHESS sponsored and if another company owns it, I guess it can put your mind at ease, because Self-Wealth is a relatively new company. You guys have been around for 5 years, did you say, or 4 years?
That's right.
Yeah, so some people might not have that trust with a newish company, a startup. But with it being CHESS sponsored, like you said, you own your shares, not someone owns them, and then on your behalf you can do whatever you want. So you own them. So if something ever happened to Self-Wealth, you still own the shares, and you can start up with another broker and continue your investing journey. Very, very key point there. Yeah,
exactly right, Matt. And that's really played out by our live chat and the people who call us up. you're right. When you're in the financial services industry, trust is paramount, and we've recently just listed on the Australian Stock Exchange, which is given. And I tell you what, it's not maybe not great for your mental health, but I would IPO or list the business every 3 months, because it's such a great marketing tool and validity and trust and credibility aspect to us. There's all these people that ring us up. Who are you? Well, we haven't heard of you. What's the bank account under the hood? And we say, well, that's ANZ, and they have faith in that. There's a government guarantee on that as well. And then when we say it's CHESS sponsored, that 1 in 5 people say, what happened to self-wealth doesn't exist. So you're spot on there, Matt. It's a very easy way to answer it and say, look, it won't affect you. Might be a little hassle for a week or two to find a new broker. But that trust and credibility piece, and that peace of mind that you own it, self-wealth doesn't, or some third party doesn't, it's spot on. It's a very valid point.
Yeah, absolutely. Now, I started on it before I didn't get to quite finish it, but I have all my holdings with CommSec. Can I transfer my holdings over to you guys, or how does that work? Can you just explain a bit about that?
Yeah, it's a very simple process. We use a sort of online application process, and there are 2 things that you can do. Well, really 3 things you can do when you sign up. You can either sign up from scratch and put cash into the account, and we will create a CHESS-sponsored, HIN holder identification number for you. Yep. Alternatively, you can say, I still want a new HIN, but I want to transfer my assets from CommSec or E*TRADE, say, over to this new HIN. Or the third option, which is what about a third to 35% of people who sign up initially with us, is I want to bring my HIN and my shares across to Self-Wealth. So they're the 3 ways to do it. It's all online. We use sort of anti-money laundering, counter-terrorism, behind the scenes with a company called Veda. So it's seamless, and you can be up and running either with a new HIN or the transfer of assets in as little as 48 hours. So it's quite a seamless process.
Great. Now, and this is something and you can probably, educate me a little bit about this as well. But so I'm with CommSec, and they're CHESS-sponsored holdings as well. So if I was to transfer my holdings, because a lot of people, and myself included for a while there, was under the impression that the holdings were with Commonwealth Bank, but that is not the case, I don't believe. The actual your holdings is and what shares and how much shares you own, that's stored at the register. Is that right? A register.
That's correct.
And then, so the register, and mine, I believe, is computershares.com.au. And when I'm transferring what I own, they're simply just, I'm transferring my holdings there to reflect that in Self-Wealth. So when I log in, everything comes up and it's removed from CommSec. Is that sort of what happens?
Yeah, that's right. There are about 5 key registries in Australia. The 2 main ones are Computershare, as you say, and the other one is Link. And that is not so much attached to the broker. Each company, so whether you're investing in BHP, Woolworths, etc., they choose their own registry.
Right.
So your shares that you own through CommSec are split between the registries. So you have some on Computershare and some on Link. So if you transferred your shares across to Self-Wealth and you want to bring your HIN with those shares, without getting too complex, it gets transferred. That HIN gets transferred to Self-Wealth's PID.
Right. And
the PID is what the registries acknowledge as where the shares now sort of reside, and they will be split between the registries. And Computershare and Link pretty much have about 90% of that market, though.
Okay, and if I bring over all my my holdings, is that, and if I sign up, I get the first 3 months for free, the community aspect. Can I do the analysis on my current holdings that I've got that I'm going to transfer across?
Yes, you can. We do, at this point in time, you'll come across and you'll enter Self-Wealth at that point in time. We won't bring any history in. So the analysis will really occur from that. However, new functionality we're bringing in within about 3 months' time will enable you to backtest your portfolio once you do bring your holdings in. But at this point in time, your sort of history with Self-Wealth will start from the day you join us. Great.
Awesome. So I've seen as well that you've got an app on Android and iPhone, I believe. Is that free app for members?
Easy free app is exactly right.
Right.
You can do a couple of things with that. So it's not necessarily just for members. We do have quite a few people who sign up and set up what we call a virtual portfolio. So literally you can come in and create, it's like a watch list, and we call that a virtual portfolio. And you have all the bells and whistles, and yet again, 3 months free for the community. So that can be also on the app or through the main application solution on your desktop. But obviously the app, you can trade through the app, so that's obviously only for people who have signed up for trading. But you do have this trading and the virtual portfolio if you do wish.
Great. Awesome. I did see that. Looks pretty slick, so definitely make sure you check that out. I'll put a link in the show notes. Now, I got another question. There is a tool, online tool that I use all the time, and I know a lot of my listeners use, called ShareSite. I don't know if you've ever heard about it.
Yes, this it gets raised with us every couple of weeks.
Okay, I'm going to put it to you, Andrew. When is the integration coming?
Good question. Look, we're actually catching up with the ShareSite guys. I know Doug Morris, who runs ShareSite quite well, in Sydney within the next couple of weeks to talk about how we better will integrate with their APIs, etc. So that's watch this space. But that's yet again by popular demand. Not only is ShareSite members hassling ShareSite, our members are hassling us because it is a great tool for reporting, etc. We're sort of the brokerage and the portfolio construction tool, where they're one of the best reporting tools going around.
Absolutely.
So watch this space.
There you go. Exclusive. An Aussie Firebug exclusive. It's coming, guys. You can stop asking about it. It's in the works.
Yeah.
Now, you mentioned before the banks and entering fintech. Now, I've interviewed a few companies in the fintech space that have won a bunch of awards, yourself included. I had a look at your website. You've won a whole bunch for the last couple of years. It seems to be, and like you said a little bit, I feel like they're going to get left behind quite quickly as well, because I work in a semi-large organization, and there's heaps of politics in there, and yes, decisions take ages to get done. Whereas a startup, you guys seem to be able to move so quickly and with the times, and a guy in his garage can make a company, and in 3 years, have more of a reach than some big company. So how could the banks ever compete with something like that?
Yeah, well, they have the biggest asset of all, which is hard for fintechs to tip away at. And I mentioned it briefly earlier, and that's that trust piece, this solid understanding that, this bank isn't going to go anywhere. I'm not going to lose my money. Now, banks can get lazy because they know they have that. They've got this massive distribution base. They've got this massive customer base. And as I mentioned earlier, to break it down really simply at the highest level, whoever is going to win, it's either going to be the fintechs that get the distribution or the banks that get the innovation and can work out how to innovate quickly. Whoever gets that in line first will win. And another thing that we've discovered as well, it's not just being a fintech being twice as good or 3 times as good at what the banks do. You need to be 10 times as good. So that's that customer loyalty, to get them to actually pick up, and this friction of moving from one institution to another. And one of the major benefits that the fintechs have, and this is where it's probably going to unhinge the banks and the banks may lose, is that the cloud. I mean, we have such an advantage of starting in the cloud. I mean, we've built Self-Wealth up with just over $10 million in funds, and we've only got 12 full-time staff. And starting in the cloud just provides so much scalability and so much ability to do things quickly and at a lower cost. So if you take NabTrade, for example, NabTrade have just spent $200 million upgrading their own systems. And with the bricks and mortar and their 7 computer legacy systems attempting to talk to each other and all their staff, it's very difficult for the banks to move and to come down from their $20 and their percentage-based fees. So by being in, say, Self-Wealth, for example, a $9.50 flat fee, that's a significant impetus to move. And we really don't believe the banks can match, because they can't move to the cloud simply, and also with all the drama that CommSec or CBA have gone through based on their EFTPOS dramas over the last couple of years, the security and tightening up of their security and the cyber threats are top of mind. So it'd be very difficult for the banks to throw away all their computer systems if they hug close into them in-house and throw it all out to the cloud. So I think that's the significant the benefit that the fintechs have. And, there's probably 5 years of lead time that the fintechs can garner that distribution to really start to be a significant threat to the banks before they can do anything really about the size of their and the slowness of their internal systems.
Yep, absolutely. Yeah, I think you've nailed it, because even the trust is a big one, and I'm self-proclaimed huge tight ass myself, and even moving from CommSec, where it's more than double than what you guys are offering, it's still not a very easy decision straight away, because this is everything, all your shares, and it's so important. So even though I'm paying double, I'm just I put it off for the last couple of months, really looking into SelfWealth, just because it's, in my mind, it's safe with CommSec, it's trusted, everyone does it, whereas SelfWealth is something a bit new. But now, interviewing yourself and learning a bit more about you and the company, that's a avenue that I think I'm going to go down to investigate further. But yeah, the trust is definitely a huge part.
And if you look at the markets, at least the online broking market, there are about 700,000 active online traders in Australia. I think there are about 3 million who have got an online trading account, but 700,000 of them are regarded as active. Now, the banks own 75 to 80% of that through CommSec, trade obviously being ANZ, NAB, Westpac, etc. And they control a significant portion of the market. That's really what we're after. SelfWealth becomes a profitable business with up to 2% of that market we're closing in on rapidly. There's no legacy systems, no big staff overheads. So they, when will the banks sit up and take notice of fintechs, and especially us in the online broking market? Probably when you start to get to around the 5% mark, and that's when things are really too late, because the momentum is really shifting. Another thing you mentioned about that friction of moving, we actually surprised ourselves a little bit, and I think fintechs are getting a little surprised at some of the early success they're having, although it's still just a blip on the radar. But I mentioned earlier that about a third of our people who are signing up are bringing their assets across straight away, which surprised me. We initially thought that 95% of people initially signing up would sign up with a new HIN and cash just to try it out, then get that trust over time. But we've been pleasantly surprised that 33% of people are signing up are actually taking the leap straight up. So that's maybe that's a new education in this new internet cloud-based world that people are trusting. Yeah,
they got more trust.
Yeah.
Absolutely. Now, speaking of, looking towards the future, and you mentioned, the next 5 years is crucial. Where do you see SelfWealth in 5 years? Where do you want to be, and where do you see yourself moving towards?
Look, I think an internal goal for us is to get to that 5% of the industry. Hopefully, we'll do that in sooner than 5 years. And that's looking around those 35,000 units of the 700,000 active online traders. Getting to 35,000 is a nice sort of audacious goal for us to get to. Probably, as I mentioned, we'd like to do it sooner than 5 years. Also, we'll be launching other products and services that our users are demanding from us. Margin lending, international trading, yet again, flat fee international trading is we anticipate launching that next year.
That's quite a big one. Flat fee international trading. So you guys, at the moment you don't offer international trading. So anything outside the ASX you don't offer, is that right?
That's correct. So the only way to access diversification into international fixed interest, etc., is through ETFs. So you can get that international exposure, but it's just what's on the ASX. So, but the international ETFs are very popular with us.
Yeah, that's because I only do the ASX, and like you said, my international exposure is through ETFs myself. But I have seen, a few people like to buy international shares, so that's quite a big one as well. International trading next year, did you say you're hoping to get it?
Yes, and we, courtesy of a deal that we have, we're in the process of signing up. The beauty of this, it'll be sort of an Australian first, that you'll be able to settle the international trades, say whether you're buying Alphabet, Google, Facebook, etc., on your same domestic Australian HIN and settled through the same cash account. So it's going to be very exciting. So it'll be quite a seamless process to be able to, buy Woolworths and then Facebook, and all have it all sitting on the same HIN, legally and beneficially owned, not under trust or custody. So we're very excited by that, and we would hope to get that within before June next year. And yet again, it'll be a flat fee solution as well. Australia's only flat fee international trading solution.
Amazing.
Also, overseas backends, we do want to make sure that we solidify our competitive position here in Australia first. But the social networking or the peer-to-peer part of our business and the flat fee brokerage is translatable to many markets. And the UK and Asia obviously beckon first because they've got similar regulatory regimes like ASIC here in Australia. So we, at some point in time, we'll head off offshore as well.
Great. All right, Andrew, I think we've just about covered everything. Was there anything else that you wanted to add?
No, I think that's it. I really, to dumb it down and keep it as simple as possible, we are those two solutions at the moment, the flat fee brokerage and this community of investors to help you better invest. And, and we are constantly developing new solutions based on the feedback that we're getting. So, hence international trading and margin lending, etc. But no, look, thank you very much for your time. It's been a pleasure.
It's absolutely been a pleasure, Andrew. Thank you so much for taking time out of your busy day to tell us a bit about Self Wealth. This is a product I'll definitely be investigating personally, and I'll probably be doing an article about it with the release of this podcast, I would dare say. So, watch your space. Thanks a lot, Andrew.
Thank you, Matt.
All right. If you enjoy this podcast, guys, and want me to make more, make sure you drop a comment and rating on iTunes. And just for everyone's information, I did check iTunes for the first time in a while the other day, and I've seen a whole bunch of ratings and comments. So thanks a lot, guys. That's awesome. Just search for Aussie Firebug on iTunes and you will find me. I'm also on SoundCloud at www.soundcloud.com/Aussie-Firebug. A transcript and show notes of this episode can be found on my website at www.aussiefirebug.com. Thanks again for your time, Andrew.
Thanks, Matt.
Hi guys, I hope you enjoyed that episode. If you're thinking about signing up with Self Wealth, make sure to use my unique link that I'll provide in the show notes to get an additional 5 free trades added to your trading account when you join. This is a platform that I've personally tried and will be using from now on because of the low brokerage costs. It's 100% free to join with no ongoing costs if you're only using it for the brokerage, which is what I use it for, and I think $9.50 per trade, no matter how much or how little you're trading, is a pretty good deal. So definitely worth checking out, guys. And again, thanks for listening. Thanks, guys, for listening to another episode of the Aussie Firebug podcast. For links to all of the resources plus an entire transcript of this episode, head over to aussiefirebug.com. Make sure you never miss out on another episode by subscribing now on iTunes or SoundCloud.